Hey everybody, quick tutorial on watch lists, how I set them up in eTrade Pro. Let me start by saying this. If you don't have time to do this or you don't want to do this, don't worry about it. I make my living off of subscriptions. You know, it's my job to do this. I still think it's valuable for you to know what I do behind the scenes. It just adds value to the trade alerts that I send out. So I thought I would put together a tutorial on how I set up my watch list and what I look for on a regular basis, and hopefully that will increase the successful trades that I make in the future, and therefore make my buy and sell strategy more appealing. So let's get started. First things first, very simple. There's too much information out there to overcomplicate things on a regular basis. Too many people make things very difficult when they should just be very easy. I taught for 10 years, and on the side I traded, and to do that I had to have a really good system. Now that I'm doing it full time, I'm able to refine the system and make it even better, which is why I started this premium newsletter. Having said that, my system is built on a simple philosophy. Find stocks that I like under $5, add them to watch lists, look into the company filings, and then look for catalysts to drive them up or down if we're shorting. So 1 cent to 25 cents. Rarely do I go for the sub pennies, but I will trade them at times. I don't have a watch list for them. 25 cents to $1, $1 to $2, $2 to $3, $3 to $4, $4 to $5, and then promotions, big budget campaigns like LAXG. There's a $3.2 million budget behind LAXG. So it's a safe trade, in my opinion, if you get in early and you avoid the flush. Anyways, promotions get their own category because sometimes they're short-lived, sometimes they work, sometimes they don't. So that's it. 7 categories. Rarely will I put more than 10 stocks in a category. I just think that that's overkill. Too much information can drive somebody nuts. The tickers on here, I'll look into the filings, I'll look into catalysts, I'll look into technical breakouts or chart patterns that I like, and when I find something that I think is a good setup, that's when I make my entry and send it out by alert. It's that simple. So within each watch list, I have the ticker, news, the open, the last trade, the percent change close. Right now it's sorted by last trade just so you can see the lowest price stock in the category to the highest price stock. During the normal trading day, I would sort it by percent change. Number of trades, liquidity is important. Unless it's a bid buy with a future catalyst, a future catalyst that could cause the price to go higher. Number of trades is important. Want to have people trading this stock so I can get in and get out. Market cap, my favorite is about 100 million. All right, that applies. That brings in the big boys as well as the smaller traders like you and I. And when the big boys can get in a stock, the market cap around 100 million, it can really move. So it's important that the market cap is right around 100 million to me. Bid ask, level 2 tutorial, you saw that. And total volume, again, that relates to the number of trades. So it's important that it has liquidity. So anyways, when I go out to a party, or when I search the message boards, Yahoo Finance, Investors Hub, TheStreet.com, whatever it is, the newsletters that I subscribe to, and I get a ticker, a company that I think has potential, I'm going to add it to that specific watch list, and then I'm going to start to learn more about the company. And once I find something I like, that's when I make my, my buy. So anyways, on a regular basis, after I found something I like, I'll pull up the chart. So AEZS was brought to me by a friend the other day. This is an ascending triangle breakout play, and you can see that the stock has a really big surge in volume, over 10 million shares traded on Friday, and it just jumps up to an insane high right through here. You can see the resistance right there. This is a pattern that we can find repeatedly. So it makes a 3-day run, it pulls back, right? And it makes a run at that resistance area again, but it pulls back. But the important piece isn't the fact that it didn't break it. The important piece is that people gobbled up shares at a higher low right here. See the run, see where it pulls back to, see the next run, see where it pulls back to. That's the important piece. All right. Understanding candlesticks is way more important than understanding technical indicators. Technical indicators are just a result of candlesticks. Don't get caught up in technical indicators. It's a waste of your time. It's just a self-fulfilling prophecy because it relies on it relies on the price action. You know what I mean? So everything you need to know can be derived from the candlesticks and the volume. Don't waste your time on too many technical indicators. If you want to do technical indicators, do one from each category. Do momentum, do trend, and do volume. That's it. One from each category. If you have more than 3 technical indicators on your chart, you are wasting your time and you're basically not following the rules of multicollinearity, which is, using too many technical indicators from the same categories and getting redundant information. Don't do that. Just use candlesticks. Learn candlesticks. Everything you need to know is right here. All right, so having said that, with this chart right here that a friend of mine brought up the other day, it moves up, it pulls back, it moves up, it pulls back. Anybody watching it in through here should know that the stock is making higher lows. Look what it does when it tests the $2 range again. Test the $2 range and look at the low right here. We've got a low of 153. We've got a low of 171. We have a low of 180. Now you better be scanning the fundamental analysis to look for a catalyst to send this one higher. Okay? Something is going on with the stock. It's accumulating, and as that triangle gets towards the apex, it's going to break to the upside. An ascending triangle is one of the most bullish candlestick formations that you can chart because you have a top and you have higher lows. Essentially what that's telling you is that every time it dips, people are grabbing shares on the dips at higher prices. Common sense, it's bullish. People are buying at higher lows. And eventually it creeps up on that top trend line and boom, it pops to the upside. Look at USAT. Same thing on a successful trade we made just recently. Higher lows, top resistance area. As the stock creeps up and that apex gets closer, it eventually just spikes right to the upside. ZLCS. There's no rocket science behind my alert on ZLCS. Look at this. Okay, you start to see some similarities in the chart patterns that I look to trade. High, high, high. Look at the lows. Right in through here, the low was on this dip right here, $1.76. The low in through here was about the same range, but in the 180s. Look at this right here. This is when you start to watch even closer. Stock makes a low in the 220 range, all right? So it challenges this top resistance area, but look at where it pulls back to. It means people are gobbling up shares on the dip because they think something bigger is coming. I always assume somebody knows more than I do, so I can pick that up from the chart action and make my trade successfully as a result. So anyways, this one starts to pick up. Look at the volume here. See how bullish it gets? They release good news, and what do? I buy and I alert you. What happens to ZLCS? It breaks through the top. What happens to USAT? Breaks through the top. See what I'm talking about? And this is what I look for. It's not rocket science. All right, so having said that, that's just one of the many chart patterns that I look for. I'm not going to go into all the chart patterns that I look for and all the reasons for making my alerts. But I will go into the promotion side of things real quick. Look at LEXG. This is a walk-up based on a huge marketing campaign. And I released that information to you once I found it out. Made a successful trade in the $1.08 to 120 cent range, and then again in the 140 cent range. But I only played for about 10 cents. And some people said to me, Jay, how come you didn't hold this all the way up to 360? It's just not possible in my opinion. I won't go long on big budget campaigns like this, because like ALZM, this is how it ends up. And it's not necessarily a bad thing, but you just need to understand the information behind these campaigns. There's been a huge budget to bring awareness to the stock, right? So LEXG, huge budget, $3.2 million. ALZM, when that budget runs out, people lose interest in the company because it's not getting out to new people on a regular basis. And when that happens, people want to take profits. They start selling, but there's no new interest coming into the stock. There's no promotion to market it anymore. And as a result, the stock sells off. So I traded this one on the technical breakout right in through here. And the next day it pulls back on a flush. And I lose a couple of $1,000s, right? And that looks like a bad trade. But look what would have happened if I didn't cut my losses quickly. Look at where I could be right now. So I sell out up here for a couple of $1,000 loss. But the stock, if I had said, oh boy, I really hope it comes back. I can't stomach taking a couple of $1,000 loss. Look what could have happened on this one. I'd be sitting on 80 cents a share right now from a purchase at the 250 range on the technical breakout, or 255 range. You know what I mean? So I went for the technical breakout. It failed. I got out. I cut my losses. Yeah, the stock levels off, and maybe it's going to come back. Maybe it's not. But look it. LAXG most likely will do the same thing. So that's why it gets its own separate category, because I just play the run-up. All right? And there's nothing wrong with that. KNKT, same thing. Same company that was marketing it. You see how that works? All right. So now that you've learned how I work through my watch list, understand that you can do the same thing and it's not rocket science, but don't overcomplicate things. I think you should learn candlesticks, learn how to read company filings, and look into whether or not there's a catalyst that could cause the stock to go higher in the future. Once you find something that you like, look to buy it at the lowest price possible. Don't buy on the ask, buy on the bid. So a good example will be JMBA. JMBA is from this category here, $2 to $3, and I think this stock is going to squeeze and move up higher in the near future. I think that because it has a short interest, a significant short interest, 12 days to cover, all right, based on the volume, which is huge. It's getting some good coverage from places like TheStreet.com, etc. And the company's reorganizing itself. It looks like it could, start to move in the right direction. It's been beaten down for quite some time. If the company releases or people catch wind that the company is going to release good earnings in about 30 days, it's going to run up prior to those earnings. So I'm looking to trade this stock from, somewhere around, I would say 225 to 210. I'd like to get it on a dip if it pulls back here in the near future. I think it very well could pull back in the near future. So I'm going to be watching for a dip. If the company dips, I'd like to pick it up around 210 a share, and I'll play it prior to the earnings for the run-up. I did the same thing with HEK. A lot of you know this. Sent this out on alert. HEK in the 550 range, played it through earnings, or a 535 range. I think I called it as an ascending triangle breakout. Again, same pattern. Hits a high, pulls back, hits another high, pulls back, hits another high, pulls back, and it'll probably continue up. I haven't looked at the company in a while because it's above my $5 range, but you get the point. I called this one in through here. You can see that chart pattern. Trough 1, trough 2, breaks to the upside. They had earnings, it pulled back. I'm not sure where that was. I think it was in through here, and then it continues on up. All right, and rinse and repeat, my friends. It's not that complicated. So this is what I do. This is what goes into my research. I add stocks on a regular basis to these watch lists. To summarize things for you, I've got 6 price categories plus promotions. I keep no more than 10 in each category. I move them out as they lose interest. I move them in as they gain interest. I move them up as they get closer to being traded. I move them down as they lose interest and eventually off. And that's how I operate on a regular basis. And I do this so that I can win 75% of the time, because keeping it simple like this and just learning about these companies and moving them in and out, and looking how they trade and looking the short interest and looking how the company's reacting to news and stuff, increases my success probability significantly. And if I can get 75% of the time, then I'm going to win in this market. 90% of traders lose, and I'm determined to constantly stay in that 10% who wins. And you're following my buy and sell strategy. Understanding how I operate my watch list, I think, will help you in the future as well. So that's that. 13 minutes. Hopefully you've learned something. If you want more information on this, just email me, jason@pennystocklive.com. Have a great evening, everybody.